Hello everyone, the rupee is under constant pressure. Crude is not stopping, rupee is not stopping, it is declining and it is forming all time lows every second, third day. Today again rupee declined for the first time beyond 96 levels and dollar INR touched an all time high of 96.15 today. And in the last 5 to 8 minutes of the markets, RBI had to intervene and it came down and ultimately closed at 95.96. Okay, I want to particularly look at this. This is the onshore chart, dollar INR onshore chart. We have been following this chart and we have been very clearly looking at this upward sloping trend channel and how in the recent times the prices have gone beyond the upper level of the trend channel. So I want to particularly zoom in this area. Okay, please have a look here how the prices have gone up steeply higher. Okay, it did see some bit of a correction for 2-3 days, but then again the prices have gone up and it is a very serious time, very nervous time for the dollar INR. Okay, so now let's come back to the overall trend. Understand very well, rupee is under tremendous pressure. Okay, so this is the onshore chart, the offshore chart. Okay, let me show the offshore chart. This is the 24-hour offshore chart. A similar chart, we have this trend channel. Understand one thing, these are the moving averages what we closely look at. Okay, and the prices have gone significantly higher than the moving average. Okay, so this is the table, this is the chart that calculates the difference between the price and the moving average. And if you look at this level, it has reached highs. Okay, all have these lines have reached the highest levels. So no doubt that the prices have reached an extreme level, very clearly understood by the moving average and also clearly understood by the upward sloping moving averages that are sloping upwards. Okay, now another thing important is, as I said before, a very steep rise. Okay, very steep rise which is slightly unusual, but now obviously the demand supply mechanics are heavily skewed in the favor of higher demand and not so comfortable dollar supply. So that is what is pressurizing the rupee. Now let's also come back and have a look at Brent prices. Okay, this is the real key. If you look at Brent, this is a 4-hourly chart. The other charts that I showed was daily charts. This is a 4-hourly chart. Okay, so if you look from this extreme left side, this is the period where the markets were stable, the periods before the war. Okay, this is the period before the war, and let me just get this here. This is the date of the war. Okay, there was an up gap, all of us know that, and since then, since this up gap, the prices have gone higher. Now what is really worrisome is if you look at the recent history. Now the prices went higher again. Okay, came down a bit. Now again it is continuously going higher. Okay, and if you see this trend line, we have seen that the lows are getting higher. This low is higher than this low. Okay, and is certainly higher than this low as well, this low, and the latest low is also higher than the previous two lows. Okay, so the lows are getting higher. Fortunately, the high is capped at around 119, 120. So that is the Brent price. But unfortunately, the prices are rising and there is no respite, there is no recovery on crude. And as long as crude stays above 100, 110, rupee will obviously face that kind of pressure. So let me come to the rupee chart. Okay, so what is in here for exporters and importers? Obviously, it is a very nervous time. It has reached all-time high levels. Dollar INR has reached all-time high levels. Risk management is very challenging for dollar importers. Okay, now we have seen regularly in the last few years, 5-6 years, that the rupee weakening is substantially more than the forward premiums. Forward premiums are much lower at around 3.25% per annum, which effectively is around 20 paisa a month, 20 to 22 paisa a month. Okay, so you should look to do forwards. All dollar importers, as soon as your exposures arise, you need to look to do some degree of forwards, at least 30 to 40% of forwards as soon as your exposure arises. Okay, beyond that, whenever there is a rupee recovery, we have periods of rupee recovery like this. Okay, a small recovery period here like this, and another small recovery period like this. Okay, so rupee recovery is happening, but it is dependent on news from the Middle East, crude coming down or some ceasefire happening. So rupee recovery is dependent on that. So whenever rupee recovers even by 1 rupee from its previous low, previous peak of dollar, you should look to do some more forwards. But dollar importer should also look at doing vanilla options at least 20 to 25%, so that if rupee does recover and there is a sustainable ceasefire and rupee recovers, you are able to participate in that rupee recovery. Okay, so do hedge some good amount of forwards as soon as exposure arise, and over a period of time increase with forwards as well as vanilla options. 25% certainly hedge using vanilla options. So what is it there for dollar exporters? Dollar exporters are minting money, they are very happy. Rupee is continuously weakening, they are realizing more rupees for every dollar. So they might think that why should we hedge? Okay, so that's a very logical thought that comes to all dollar exporters' mind. Okay, rupee is weakening, why should you hedge? But understand one thing, if you keep your positions unhedged, you are exposed to this volatility. Your statements will see a lot of volatility because unhedged positions, and that completely depends on market rates, and market rates are volatile. So what exporters should do is you look to use some vanilla options, dollar puts. Okay, use dollar puts and some portion of forwards. Exporters importers will have more forwards and some few options. Exporters will have the reverse. They have more options and some smaller degree of forwards. Okay, vanilla options I had shown in the last week's video. Vanilla option premiums are relatively modest, not really very high, but they are not low for sure. Okay, they cannot be low. The geopolitical environment is very nervous. Vanilla option premiums cannot be low, but they are not high, they are moderate. Okay, so cost wise they are good. So you should certainly look to use options as a hedging instrument. Okay, so that is it from my side. Have a great weekend ahead.